Welcome back, everyone, to Living Your Greatness. And I am super excited to welcome back Chris Vermeulen. Chris, good to see you today.
Always a pleasure, Ben. Looking forward to the talk.
Yeah, good to have you back, Chris. And, lots has happened already in 2 months. When I saw you 2 months ago, silver was around just over $50, and even gold
Yeah.
is just around over $4,000. And a lot has happened. And pretty much last week, we saw some really all time highs. And then today, where I have you on, which I'm happy I have you on, you were calling a couple of days ago about a pullback happening. And here we are today. So I would love to just pass the mic to you, Chris. What are you seeing? Why has this pullback happened?
Yeah. Well, the pullback, I think you're talking about in silver, probably. It's been
Exactly.
pretty wild, the precious metal space. Nothing is out of the norm. I mean, I was at the VRIC event down in Vancouver on the weekend, and I was talking about it. You got to look for a potentially, I was saying a 40 to 60% pullback in silver. And I still actually think we're going to get that. Although today, as you and I are talking, silver was down 32% alone. But it just goes to show how sensitive this is. Such a crowd, mass market participant play. Everybody's been piling in, chasing it higher. I was at the post office the other day, and their silver rounds and silver area is completely gutted. There's nothing left. I was talking to some subscribers. They were in Toronto selling some gold because we sold some just at the peak like 2 days ago. And they said there was two massive lineups at the bullion store. There was one for buyers, one for sellers. And it's just a feeding frenzy. I sold a bunch of my position to Sprott a couple days ago, right at the peak. I got top dollar for it, way better than any of the other people, like what members were telling me they were getting paid, which I felt pretty good. And they said the same thing. They're like, "Oh yeah, as soon as we buy it, I'll literally the next phone call, we'll be selling it to somebody else." Like everybody's just piling in to buy, right? And so this pullback, as we're seeing, which is Friday, January 30th, it is definitely an emotional day. It's been very emotional for silver for the last really week and a half, but today's selling definitely I could see is wreaking havoc with people, and people are jumping and bailing out. I actually think the sharp pullback is going to be very much like a meme stock type of play, like a GME, and you get these super sharp bouts of selling. Everybody chases, and then they all eject at the exact same time. You could cut the air with a knife this morning as markets were falling, and usually the market has a big move after that. We could technically see if this market is potentially how I think it is. Silver's down 32% today. Maybe Monday or Tuesday, it's back up at all-time highs. And it's just going to shake the heck out of people. And people will jump back in and think, "Oh my gosh, it's about to take off. That was just a pullback." I don't think it's going to go a whole lot higher. I had a target at 106 last week. And when I was at the VRIC event, I said, "Listen, when it hits 106, that is our technical level. Once it breaks 106, it's going to go into a euphoric emotional phase." And it did. It spiked. I said it was going to go to 120, 130, or 140. It went to pretty much 120. And then we've seen it top out here. So everything is moving exactly as planned. People who don't understand technicals, who chase price, who follow the news and fundamentals, they're in their own lane and they're super emotional, and they're really, to me, they're running blind. The charts are like the dotted line on the road. You know what side you're on. You know how to follow it. You just follow it, price action. But so many people get caught up in the news, the emotions, and all of the fundamentals and the manipulation talk around it. It gets you really messed up. So I think I think the metals are close to topping. If they haven't topped already, I do think we're still going to get a big bounce. But this was definitely a panic sell off dump kind of day. And there's going to be bargain hunters. Usually the first really sharp pullback on a move like this, where the whole world just chased it, a lot of them are going to panic out, but a ton of people are going to pile right back in and probably drive silver back up to like 110 or 120, maybe even higher in a day or two. But we'll just have to see how that unfolds.
Why do you think this is going to be a bounce? And why is this maybe not pullback that's going to continue to go downward?
That's a good question. I hope I mean, it could. It definitely could. I talked about this in my morning video with subscribers. I said, let's hope it's not a series of big red bars and we see silver back at $40 in like 3 days. That's what I don't want to see, because the problem is once we broke 106 and we locked in profits at like 113 or something yesterday or a couple days ago, it puts us into bubble territory. And while I can gauge and trade technicals when you're reaching targets, once you break a target and you're into no man's land, and it is clearly a euphoric move, people are chasing it, they're loving it. Bubbles are unpredictable, and you don't know if it is going to have a very volatile top and go back up and hit all-time highs 1 or 2 sessions later, or if it is just going to go into like elevator free fall mode straight down. And so I'm hoping to paint a picture. Like I'd like to see it in my head move back up to 110, 120. Then I can unload potentially the rest of my position because I still hold a good chunk of precious metals. That's the scenario I want, but it could roll over and continue to sell off. And depending on how it moves, I might have to liquidate at a much lower price the balance of my position, which is just part of the game. When you play a bubble, you're always taking the risk that any day could wipe out like a huge chunk of that. And that's what we're seeing with this big pullback. But I'm hopeful that there's going to be a bargain hunter stepping in, buying this bounce. I know a lot of people are clinging on to like a 30% correction or so. That's what it pulled back today. And so that means a lot of people are going to step back in and buy it and think it's bargain hunting. So um, the reason I think it's going to bounce is just because of sentiment. There's so many people chasing it. They pay a premium, then they scale, they get scared and they get shaken out, but then they jump right back in and they like take another run at it because it starts to move up and they don't want to miss out on the next move. So just because sentiment is as extreme as it is, I feel like the top's probably not in yet. I think there's going to be people jumping in for one more bout of buying. And I think if we get a big bounce here, I think it's going to be time to liquidate the rest and step aside and let the dust settle probably for months. Could even be a year or so before metals become a very good buy again. In fact, it could be longer than that, but people don't want to hear that.
All right. So then let's think there's two words you said, this could be a bubble situation. So if we think of a bubble hunter in one category, and then
Yeah.
another category, if we have a bargain hunter, you think right now you're leaning towards the bargain side. So could you walk me through, what would happen if the bargain side happens of what price targets? I know I just heard for silver, you mentioned maybe 130, 140, but what would that look like for gold as well? And then
Yeah.
the same thing with the bubble. So if we could hear both of them.
Sure. So this is the silver chart. This is the daily chart. You can see it takes the staircase up and the elevator down. This was a very big pullback in the past 24 hours. Uh, when you have a very sharp pullback to an extreme level, this is to a 50-day moving average. I actually had done some Fibonacci analysis, some retracement levels. And if we were to do some retracement levels, so a Fibonacci retracement, if people don't know what that is, go look up the Fibonacci theory. It is extremely powerful. Long story short, it's everywhere in the universe. And so we can figure out based on this run up, the universe, the way things seem to unfold, the sweet spot is between the 50% pullback and the 38% pullback. It came right down into this sweet spot. It's found support. On top of that, Ben, we've got it hitting this level right through here. This was a very critical level for silver. This was a pause, a sideways movement that's naturally going to act as a support. There was a lot of volume traded through there. So silver had this emotional move down into the sweet spot. And now it could easily bounce and drift its way back up. I think if it got back up, it probably into these lows over here, which is about 103. It'd be pretty tempting to start scaling out and selling off some more of the position because it could very easily roll over and go down a bit. So the bargain hunters right now is simply when you have a move that happens too quick. It just happens very fast. It's clearly an emotional move. Smart money generally steps in really quickly and starts to buy things back up. And of course, it came down to here and it's already had a nice bounce percentage wise. And I think we could see eventually people jump in and start to chase pricing higher because it's very emotional. So that's why I think we're going to get this bounce. From a technical standpoint, the damage has been done. If you sell right here, you're selling it at support. And I don't want to do that. And as much as I gave back a huge chunk of the profits that I had, I still want to give the benefit of the doubt. The trend is still clearly up. A lot of damage is done with a bar like that, but all the moving averages are up. It's still holding a critical support zone, Fibonacci support as well. And so I want to see if we're going to get that bargain hunting buyback. And we've already started to see that with the bounce. Now, in terms of like the bubble bursting, if everybody switches gears, I mean, just like literally a day ago, everybody, I met people at VRIC who had never bought metals before, and they had literally on this big 15% up day. I was talking to somebody and they like, I just bought silver for my first time. I bought physical silver, and I made a joke. I'm like, oh, you bought into the suckers rally. Um, and it's kind of what it was. Like, this was the emotional phase, right? This is like the last big push before there's some event. Usually the last people to get in, like the people who have held out as long as they possibly could, who are possibly open to the idea of buying, those, when they break and they all seem to buy, that's when you get this big push. Now the question is, do they all switch their mind going from, oh, because a lot of the people there at this event, because it's very resource heavy, they're all talking about $200 silver. And so the bargain hunters are going to be like, wow, I just got it, at a killer deal and it's going to go to 200. But what happens now is if people get too much damage done and they take a loss, they could change their mind very quickly. And suddenly they're going to be picturing like big red bars. And they're like, I don't want to hold this anymore. So we just need to give it a bit more time to see if there's a bounce that's going to create some belief and if people are going to chase and drive it higher, or are there a lot of big players just hammering on the sell button? Are they just panicking to get out? But I mean, we never know. No one knows, right? So many people online and all the YouTube channels. I mean, everybody gives specific pricings. This is going here. This is going here. This is going to happen. And that's what people want to hear, and people buy into that. But nobody actually knows. You need to have a game plan for both strategies. So if it does bounce, we have a game plan of where we're going to start to scale out, lock in profits. If it does start to break down from the support level, potentially starts to break down below like $69, which is a pivot low. It's also below our 50% retracement. I might just have to pull the plug and lock in gains from there, and just say, okay, well, I got a bunch at the high. I got some out as the trend is now technically turned down. I got a nice average price and be happy with it. So that's kind of where we're at for the chart of silver. And I do think we could see silver back up at 110 for some reason. I think that's going to be a technical, emotional recoil very quickly. But we can look at gold real quick. Gold, a lot of volatility. Both gold and silver have done the same thing, and I covered this in a morning video with members. So I love Fibonacci extension. So based on this previous rally that we saw and this pullback down to this low, if we carry that forward, we end up getting these moves. And so you have this rally up, you got the pullback, and then you hit the 618, which we got into gold over here for a quick trade. We locked in partial profits. And then we hit our 100% measured move right here. And if I zoom in, what happens after you hit a 100% measured move is you go into these euphoric phases. And our move for gold was 100, it was 176, somewhere in here was our big move. And so we ended up closing out part of our gold position right over here. And then once you hit that 100% measured move, you go into an emotional state. And after an emotional state, like both of these, this and this, you go into a very big pullback and it takes months to consolidate. So for all we know, gold and silver are going to trade sideways, build another launch pad, and then maybe we see a bigger run up to 6,000, 8,000, who knows? So both gold and silver are doing exactly what they do when they hit these targets, and then the emotional people chase it and pile in right at the end. And then it puts them through this roller coaster ride. And so the big question is this a pause before going higher, or is it, a top? And at this point, the trends are still up, and trends are more likely to continue than they are to reverse direction. Although everybody always tries to pick bottoms and tops, it's a long-term losing strategy. Just stick with the underlying trend. This is a sharp pullback. It was emotional driven. It's at support. And so we got to give it the benefit of the doubt.
I really appreciate that explanation. And I would like to get some more clarity on when you eventually see gold and silver actually falling down. Because right
Mhm.
now it sounds like you see in the short term it continuing to trend upward. But when that does happen, is this something that people should be really, really concerned about? If you look out 3 to 6 months, what would that look like for you?
Yeah, I think it's something to be concerned about. I mean, precious metals is a very sensitive topic, right? People involved in it are involved in it for a lot of different ways. A lot of them think, and I'm not saying they're wrong. A lot of them are heavy into the government and a lot of manipulation, and the currencies are going to collapse, and long term, like I believe long term gold and silver are going to keep going up. Just like everything else, there's inflation, everything goes up over time. Like it doesn't matter if you buy at a real estate peak or you buy at a precious metals peak, give it 5, 10 years, you'll be back up there most likely and hitting all-time highs. It's just I don't want to have a lost decades where there's no returns and you're suffering, right? I'd rather rotate my capital elsewhere. Um, but looking forward, I mean, if gold can sell off 10 or 12% in one day, silver can drop 32% in one day. That's just letting some air out of the bag. I think the markets could go for a much bigger correction. I still think gold is going to fall 30 to 40%. I think silver is going to go 40 to 60%. And I think that could potentially take months. In fact, I think it could actually, take a year or two to actually base out, stabilize, start to move up, and then start to make all-time highs again. It could be a year or two away. And that's not what anybody's expecting. All the media, we're in the perfect storm for precious metals to go through the roof, which they just have, but people think the roof is a whole lot higher. But the charts are like showing us this is the roof. This is like usually what happens right at the end of a parabolic move. And so I think if you're, I don't fall in love with gold and silver. I mean, I've held them forever. And my members and I were talking about it when we sold gold and silver the other day, physical gold. We're like, it feels like we kind of like lost like a family member, right? Because we've had physical gold forever. Now we feel naked. We're like, now we're exposed with no protection from a currency collapse, all that stuff. It's a funny feeling, right? And so a lot of people never want to sell gold ever because they believe there's just so much, so many things going wrong. There's people like me who can sell it. We're not that attached. I want to buy some back as soon as I can when I think it's a fair value, but I think we could pick it up with gold maybe at 3,600, maybe at 3,300. I think we could get silver back down somewhere at potentially the 50 or $60 mark. Um, and pick it up when it's got good value. I'd love to lock in those profits and purchase it back later. So it's really tough to tell how this will play out. It's the same with the financial crash. We're going to have one. It's just a matter of time. The question is it like a 2008 where it's like 8 months of just precipitous falling, very painful, very violent? Or is it going to be like a tech bubble unwinding that takes 3 years of falling prices and big, slow bounces lower and lower? We don't know. Most people are leaning to precious metals going through the roof. Everything's going to fall apart. But it's kind of like buy the rumor, sell the news. Precious metals, when you look at gold, like you look what gold has been doing here for a few years. If we go and look at silver, they've been going higher. People have been buying into the rumor that the world's going to fall apart. Currencies are going to blow up. All kinds of stuff is happening. And what happens? You buy the rumor, you sell the news. And we see this all the time in the stock market. People buy into earnings. They have what is it? Nvidia has killer earnings above what they expected, and it gets hammered and gets sold into because it's still not good enough, or people already bought leading into it and they sell into it. So I believe this move in precious metals and where I think they're peaking is that was that was the move for the world falling apart. And now I think we all realize everything's already broken, but it's already been priced into all of it. And so now people are taking profits and things like that. So, I mean, when you look at the silver chart and we go to the monthly, you don't have to be a brain surgeon or a rocket scientist to figure out, to take a guess of what happens after these spikes. Like keep in mind, this was way up here this morning, right? What goes straight up comes straight back down, usually for half of it, easily. But it can go a lot more. Each of these other times we're down like 70, 80%, which means you need like a 500 to 700% rally just to get back to break even, which is pretty darn hard to do. And you don't really want to wait decades for that to happen again. And so I believe we're in this phase where everything just got valued, and you're way better to protect your capital, step aside, and put your money where you think it's going to be more protected.
Yeah, and also by protecting, it's also locking in your gains, which is something that I hear you talk about a lot, and something that I think maybe a lot of investors or even traders don't always think about strategy, right? They get caught in the motion, they get
Yeah.
caught in the behavior, right? And I know behavior economics is so important to study. So I would love
It
to get
is.
your opinion on behavior economics and why more people should be aware of that.
Well, it's really tough. I've built a lot of indicators that allow me to get a gauge of fear. I have I have a fear, a panic selling index that I track. I can get a gauge on a day when there's panic selling. Today is a big day of panic selling across the board, even in the stock market. Usually when we see waves of panic selling, it's usually a short-term low. When my indicator spikes to certain levels, it's telling us the majority of people are selling shares, they're dumping it on the bid. They don't care what price they get. They're just hitting a market order, meaning I will take any price somebody will pay me to get this out of my portfolio. And so we're seeing that today across the board. When we see that, it's usually an extreme, and usually the market bounces back and it's just considered an emotional move. I also have one called the FOMO indicator, and it tells us when everybody's overly greedy and they're chasing it and they're happy and they're feeling good. And there's usually only one way it goes after that, which is like the opposite way it collapses. So I keep tabs very closely on a day-to-day basis, the sentiment, and I can track that back in time. I have other tools that I use as well to get a gauge of this. Gold is a good gauge of sentiment, the VIX, the put call ratio. All of these catch a bit different type of fear and a bit different type of trader or investor. Like the put call ratio is very short term, it's for options traders. It tells us usually, when a certain level is hit, we're like, okay, the market should rally tomorrow. Same with my panic indicator. That's usually very short term. It tells us tomorrow we should see the market bounce and go higher. And so when you get a couple of these things coming together, it's very powerful. Everything in the universe, we're all just a vibration, right? Everything's vibration. The stock market, when I learned about the stock market, it was from a guy who said the stock market is a vibration. It moves like sound waves. And I grew up in the hearing space. My parents had hearing clinics. And so I instantly put it two and two together. And he taught me about how cycles and sound waves, and the stock market is just catching a vibration of all the investors involved. And we visually get to see the vibration right through the stock market. And so that's what always got my mind. That's what got me into the stock market the deepest, was cycles and sound waves. And I still use them in my strategy today to track and trade everything that I do. And so if you know that everybody's on a vibration, when, one negative person can really like ruin a party, or you can have a couple, fun people and place like lights up, right? People are like that with investors. They move in waves of buying or greed, and they move in waves of fear and selling and negative. And so I have just tools to allow me to track that. I actually can track with the stock market. I've been working on this tool that says I can tell when people are in a buying mode, when they want to buy products. It's really, really amazing. And I've been working on it with another person, and it is really cool when you can like expect people to buy, like any store. Like people naturally are either buying or they're selling. In a bear market, people close their wallets and nobody wants to buy for months and months, or sometimes years on end. And so just knowing on a short-term basis when people are in a buying mode, it means they're happy, they're positive. When they're selling, they're nervous, they're scared. Psychology is huge. It's what moves the market, not fundamentals, not the Fed. Yes, they create short-term movements, but it's just because they said something that sparked their emotions. Emotions are what move. Emotions cause people to buy and sell, not news. The news just triggers emotions. So if you can track the emotions, and I watch about 12 different asset classes, I track the money flows in and out, how big the money flows are, which ones are getting the most or the least amount of money flow. Each of these assets are telling us what type of trader they are, and how much they're committing. And it's almost like looking at the market's hand. You're playing poker. It's almost like you can see your opponent's hand. You're like, okay, so they're holding all this and now they're running and they're selling and they're trying to move away. And once you can see what the masses are doing, it takes them days, sometimes months, to change their position. And so I ride the coattails of the market trends, and those trends are all created by extreme sentiment shifts. And that's like, I always look at the stock market like an ocean analogy. When the tide is going up in the ocean, what happens to all boats? The stock market is the same. When we're in a bullish environment, you want to hold stocks. If the market is going down, you don't want to hold anything. You don't want to hold stocks. And when we are in a bear market or mass psychology, like a stage 4 decline, a financial crisis where everyone is scared, I shared a chart this morning that shows the S&P 500, gold, silver, Bitcoin, and the US dollar. And I overlaid them all together with the big sell-off that we had on the previous session, where the stock market fell 1.5%, gold fell like 12 or 8%, silver fell 12, Bitcoin fell 5. and the dollar rallied. And this is what I always tell people. Sometimes the best position is no position, or what people think is no position is a cash. You move to cash and you go to the currency that should usually go up while everything falls. And that happened yesterday. The dollar went up, everything sold off. Precious metals are not going to avoid the market crash. They're going to get hit very, very hard when it rolls over. And that's what people, I mean, it's, you asked me, like, what do people need to know about gold and silver? I'm like, this is serious, because when the markets sell off, precious metals are not immune, and silver falls much more than the stock market. So there's a time where you need to step aside, protect your capital, and be happy either in cash. Hopefully you're in a currency that's going up in value, which I believe is the dollar, which no one else believes in, which is why it's probably a good trade. Like, that's why I'm bearish on precious metals, yet I'm bullish on the dollar. They're both opposites. They move in opposite directions. Precious metals are loved, the dollar's hated. I mean, if you say anything bad about metals, you get your head chopped off online. You say you're bullish on the dollar, they're like, you don't know what you're talking about, right? This is the same as what happened during all the previous peaks in gold and the bottoms in the dollar. It's just when you hit these extreme sentiment levels, it's very touchy. And that's when you know, if you can barely poke something and they overreact, you're like, okay, we're at an extreme right now.
Yeah, well, I also find it's really important that people, especially for technical traders like yourself, and people are following your work, that they have to really follow you. They can't just chime in here or there, or just listen to snippets of this interview and think they know Chris
Yeah.
Vermeulen's strategy or mindset, right? And I also find that's important because when I had interviewed you in November, as well as Michael Oliver, who's been getting a lot of attention right now, both of you were saying that silver was going over, $70. And at the time, that was, crazy price targets because we hadn't blown
Mm.
through, right? And that gold was going over 45,000, and it obviously did. Now, what's been interesting is what I've always really liked about you, Chris, is you're very cautious. You're really good at teaching people when to lock in their gains to make sure that there's less risk on the downside if a downside turn happens.
Yeah.
But with Michael Oliver, he's very, very bullish right now in terms of the next 6 months. In fact, he thinks that this is like a new repricing reality for the metals. And so, why I'm bringing this up is he actually believes that silver could potentially go to $500 by summer this year. He will be getting worried though around June, July about those very, very rocket ship moves.
Yeah. Yeah.
Gold even sees going at least to 8,000. Now, when I hear all these things, even if it's someone like a Michael Oliver, who I really, really respect in terms of his work, I follow just like you. Um, there are two different styles right now of information that I'm getting. So I'm curious to get your opinion on, do you think those targets are realistic in 6 months, or do you see that more in the future for your long-term thesis on gold and silver?
Yeah, I think a lot of it does come down to the time frame you're looking. I think 400 silver is possible. I do. I actually had a $400 target. I think I did this like 6 or 7 years ago. I'm like, I believe it will go here, but it's going to take a really long time. I believe gold will break 10,000. I think everything's going to go up in value, right? It's just a matter of, is it in 6 months from now, or is it like 16 years from now? So like that's the big difference. I think 6 months is maybe a little crowded, a little tight. I mean, that'll obviously be something big in the universe here has to break for silver to spike there. It's not impossible. I mean, nobody knew that futures and like oil could go negative, right? So anything is possible. Ever since oil went negative, it's completely changed my mind on the markets. I realize now, like,
Right.
anything is actually possible, and it could happen in a blink of an eye and by one piece of news, and what you thought was never going to happen is not even possible happens, and it goes beyond, right? Like negative oil, and the even silver spiking to 120 in such a short window. I mean, a lot of people are like, there's no way in hell it's going there. Most people in the precious metal space think it is, and it did. But I think the key is, like, for, as you mentioned, for me, everybody's, calls me the perma bear, or they don't listen to the fine details. So for example, almost every podcast I go on, they always label me like the end is near and the top is coming and like the final reset, right? Like, it's always negative. And there's a reason for that. Every podcast wants to get exposure. If you put a negative extreme thumbnail, you get a ton of views, way more than if you say, oh, not much has changed in the precious metal space. It's still in a bull market. It should go higher. Like that's not interesting, right? And so everybody hears snippets of what I say. Even though I do talk bearish, I do believe there's a major top happening in metals. I think there's a top happening in the economy worldwide, in the stock market. If they listen to me talking, I'm still long gold. I'm still long equities, right? Like, but they think I'm short. And there are people who are saying, I'm betting against the market. You said it topped a long time ago. And I've never said it's topped. I always say it's topping. All the signs are there, but we actually have to wait for it to top. And that's where I get, a ton of hate mail is people just don't actually listen to what I say. They just go off these thumbnails and, people watch my morning videos and stuff on YouTube sometimes. And they're always like, they're like, your thumbnail is like so extreme and so crazy. And I'm like, it's just a thumbnail, right? You have to watch the video. If you watch my videos, you'll notice every video is the exact same. I recap the markets generally in the same order every day. There's one bar that changes on the daily chart every day. Yet for some reason, people think like the thumbnail is like, the kingpin of everything. It's like, just watch the videos. Like, and it's funny because I've done some tests where I'm like, I did a thumbnail that says, don't watch this video or don't watch. And of course I get huge views, right? But it's just funny because it's all comes down to psychology for people. The thumbnail is so strong, but my video, my analysis does not change from a day-to-day basis very much other than, oh, we have a little bit of panic today or a little bit of FOMO here and there. Like that is it. I just walk you through the markets day by day. I kind of try to fandangle and manage people's emotions so they don't freak out on a day where there's big movements.
I really appreciate that answer. And I wanted to bring that up because there's only two names when it comes to Eric Sprott who he follows. For the technical trader, it's you. And for the momentum structural analyst, it's Michael Oliver. So although your approaches are different, like I always find a very simple question that Rick Rule always says is the question isn't if, it's when, right? So even if
Yeah.
maybe your time is a little bit different between you and Michael Oliver and the way you see things are different angles, your perspectives are very valid for people to check out, I think.
For
Uh,
for sure. And you can have different we have different time frames, right? Right? Different portfolios, different people, different time frames. So I used to run two different newsletters. I had a stock trading newsletter with another guy years ago. And we would literally I'd be like, for example, I'd be like, buy the S&P 500 ETF today. And he would be like short the he'd buy an inverse ETF, right? And we'd have, subscribers to both of them and be like, what the heck are we supposed to do? You're saying buy, they say buy the inverse. Like they're two opposite trades and we would both make money. And this would happen over and over again because he was shorter term. I would like jump in when the trend has started because the train started to leave the station. It's sometimes when we jump onto a trend, in most cases, that usually pulls back for a day or two before it actually goes. Like usually the market has a little bit of a chatter as it changes gears. So the trend starts, I jump on board. He buys an inverse ETF. I want to go higher. He wants it to go down. And then the next day or two, the market would drop. He would get out of the 2X or 3X inverse ETF, make, his 2, 3, 6% like in a day or so. And then the market would find a short-term bottom and rip higher. And then we'd go on to hit our targets. So a lot of us analysts, we have the same targets. We just have different ways of trading to get there. And that's why it's so important to find someone who is analyzing and putting on trades that match your time available, the time frame, how you work, like what fits your schedule, right? In your comfort zone. Do you want trades every day or every week? Or do you want to have like 5 to 12 trades a year and just catch these beautiful moves? I mean, silver was up like 670% from my entry point, like as of yesterday. Like some of these moves are really big, but I've also been in silver for many years, right? So I have a mix of short-term and long-term positions, and you just have to understand that when somebody's talking about something, you need to know what their time horizon is, which you're good at asking. You can, like, where do I see things in 3 months? Like, I think in 3 months, I think precious metals will have put in a top, and I don't know if we're going a bit higher or not, but we're definitely in the final inning of I think a peak for precious metals, and then I think they're going to be out of favor for a long time, like many months, if not a year or three.
right. So if that's the case, I would love you to share. You've mentioned it before in some of your presentations, but you talked about the different phases. So
Mhm.
what would that mean for the next phase if that were to happen?
Yeah, so let me share my screen. I'll show you the stages that you might be talking about here. So if we take a look at the market stages, and let me just go back up to the stages here. So there's four stages of the market, and precious metals are in this blow off phase right here. Which, from an emotional standpoint, as you and I were talking, if we look at the emotions of the market participants, we're in this euphoric phase. Like everybody was just chasing and piling in, and people who don't know anything about metals are buying metals. That is like, I'm a genius, I'm going to be rich. I mean, this is what I was hearing. And everybody was talking about how much money they're making. When money comes that fast and easy, it's like, my theory is like easy come, easy go. You look at the price charts. If it goes straight up, the price usually comes straight back down because it's an emotional move, either from news or just everybody chasing the same thing. And it just creates this move. So I believe we're in this euphoric phase for gold. I believe we're over here, complacency. People still think the stock market is strong. People are betting on the markets going higher, but I believe we're going to go into this huge sell-off. People are going to start to get anxiety. They're going to start getting margin calls. They're going to be like, wow, I sure hope this isn't a breakdown. I just gave back so much money. And then eventually price keeps falling and they go into denial. They're like, well, now I'm down so much. And I hear this all the time. I'm down so much, I just have to ride it out. Problem is, when we go into this stage for decline, this big sell-off, price starts dropping so fast, so consistently. Some days we'll be down like 3, 4, 5% a day, and it can do that back to back, right? People are like, oh my gosh, if the market falls like this for another 5 or 10 days, I'm going to have nothing left in my retirement. My whole life is gone. And so people eventually, because it happens with such velocity, people just don't feel like they even have time to process it, and people panic out, and that usually creates a bottoming formation. And this, if we go back, this is called a stage 4. This is a financial reset, a bear market, a crash, whatever you want to call it. These, I have it shaded green because if you know what you're doing, we can make a ton of money in a falling market. The market falls 7 times faster than it rises. I mean, the silver chart is a pretty good example of that. You look at it on the daily chart, and I mean, I could probably put it to a weekly chart, might be a really good visual. Let's just see here. If we look at the weekly chart, you could say 1, 2, 3, 4, 5, 6, 7. So more or less, like, it takes 6, 7 weeks to go up and 1 week to wipe it all out. But so the markets, you can make a lot of money from a falling market as it collapses. And then of course you can reinvest all that when a new bull market starts a year or 3 from now and catch the next big growth phase. So people just need to realize, like, most investors go through this emotional cycle. If you know what you're doing, you're a technical trader and you can step aside from the emotions in the news, you can ride this optimism, this belief, the thrill euphoric phase down the roller coaster. So instead of anxiety, we have optimism. And that's where, my subscribers and I now, we're optimistic that the markets are going to start a correction. We want it to start a correction because it's big money. As people have denial, we're going to be in belief. We're going to be like, no, this is a full-on bear market. We knew it. We're playing inverse ETFs. We're benefiting from falling pricing. As people are panicking out, we're in this thrill euphoric phase, just pulling money out of the market, knowing, like, being richer than we've ever been. And then we're going to enter this cycle and go through the same thing to the upside. So it's very important to understand these emotional waves. And if you are feeling these emotions, you're probably subject to, both sides of these, unless you're really crystal clear. Like, you shouldn't be having anxiety and denial and panic about your positions. That means you don't have an exit strategy. If you don't have an exit strategy, it's just a matter of time before you go off this cliff and wipe out your account. The question is, not if, but when the next financial crisis happens. And based on everything going on right now, we have precious metals through the roof. We have energy stocks at all-time highs. We have, from an economic standpoint, we just had AI, the new innovation, dragged the economy higher. It spurred on tons of business and sales. That usually happens right at a stock market peak, which is this blue cycle. So everything is here. Everything is unfolding in that phase. And so people need to realize that we're coming into what I think is a very big cycle, like the Benner, the Benner cycle here. This is a farmer from the 1800s. He has these 2 cycle highs. The middle line is a cycle high and the top line is a cycle high. He more or less called the tech bubble, the 2007 financial crisis, COVID. The next cycle high is more so this year, 2026. And he's calling for a weak economy, a weak world, more or less till 2032. So we got 6 years of potentially really difficult markets for those who don't know how to step aside, who don't know how to benefit from all this. And while it may not happen, there's a pretty good chance it's going to. So you better have a plan because it's going to hurt if you don't.
So what is your plan then that you would advise for 2026? Because obviously it's very frothy right now. It's swinging. It's starting to swing up and down. So what would be a game plan that you would recommend to someone that's either currently in the markets or that was thinking about maybe going to the markets? What would be the game plan?
Yeah, so I met a lot of younger investors at the VRIC show. It was really good. A lot of peer parents bring their kids, which is really cool, and they want me to talk to them, so I do. And they always ask the same thing: "What should we do?" And there's two angles. Obviously, some of these kids are like 13, 14 years old, and they want to put some money away and have their joint account with their parents. And I mean, buying an index fund and just spreading it, like at that age, you got time, you got serious time. And it's not enough money that it's worth them waiting for a pullback to buy back in because they're just dabbling in 25 bucks a week or a month, right? But for somebody who's got some big money and they're stepping into the markets, they're like, I want to get involved here. I believe it's worth your time and money to wait, I think, for a financial reset at this point. Um, because we could see a big haircut in equities and in a lot of things. And it's really nice to be able to buy things when they're somewhat fairly valued or below value. If we go into a stage four, things get way undervalued. Like you can buy dividend stocks after a financial crash, and they'll be paying like 8 to 16. I mean, I bought one in 2009. It was paying 16% dividend. It was on the Toronto Stock Exchange. It was a dividend fund, and it like doubled in price over the next year and a half. So if you can hold off and not, because right now you don't want to lose money. If you put it in, you might lose half of it, and then you'll really kick yourself. So I think until the stock market gives us a new buy signal, say it takes a pause for a few months, if it starts to run back up, you can then get in because the market could just keep going higher. So if a new trend kicks into gear, you want to get long again, but I would wait for a big pullback and a reset before that happens, because then you can move in and pick your poison. You can pick REITs, real estate ETFs, you can pick dividend funds, you can pick a bunch of stocks that you like, because then you're buying things really at fair value and they should rally for the next 5 or 10 years or longer. So you've got lots of wiggle room. So I think if you got a lot of money, wait for a reset. If you are just a small young person, I think just start averaging in, because then you're a kid and you literally own a bunch of Fortune 500 companies and you're an investor. You literally own Coca-Cola when you're sipping on it, right? It's a pretty cool feeling as a kid to be like, "Oh my gosh, I own this company. I own Kleenex. I own like all this stuff," right? It's pretty cool.
I really appreciate that feedback. And I also think it gives context to even if someone did have a lot of cash, they could always just put in a little small trench.
Yeah.
If they're
Yes,
really thinking that, okay, this is, long term view, they think it's going much higher and they're feeling that FOMO, or even if they think, okay, there might be an opportunity where it will pull back lower just based off of behavior psychology, there's nothing wrong with buying a small amount.
for sure. Get your
You're
put a toe in
comfortable.
the water, and then you're part of the journey, right? And that's what I always say to subscribers when they join. They're like, "What do I do? You're in the middle of a trade." I'm like, "Well, you could match our trade. Like you could just put it on, or you could just put in a small position just to get a feel for it. So you're in the trade, and when we update, you get that feeling of, how we're managing the position and what it feels like to go through a full cycle of a buy and a sell, like hitting targets and all that stuff. So because it does feel weird. It feels weird to follow someone. I've never really been a follower. I don't listen to other analysts. I don't listen to the news. I don't follow anyone in the financial space. I just I follow my own charts, and that keeps things very, very clear. Everybody has likes to get into the news and a lot of manipulation and all kinds of stuff going on. And I find it really blurs the lines. It makes you second guess and question your thoughts. And so I just keep it right in the narrow. I follow the charts, and I just kind of stick with what the charts are saying and invest and follow along.
And I think that's also important right now. Someone that's watching to listen to is to know thyself, whether you're a trader or investor. I find lots of times people are trying to copy, oh, what is Chris Vermeulen doing? Or what's Eric Sprott doing? I think the question should be, what are you doing? Based off everything that you're learning or knowing your risk tolerance, you have to know thyself before making any move, any decision, big or small. I
Yeah.
think it is so crucial. Like we see so much, not only in the investing world, but we see so much, people always comparing to others, right? Rather than just knowing their own strategy, their own game plan and following their path.
Yeah. I think a lot of people, they want to naturally be more active. There's something about trading. Most people naturally think like if I trade more, I make more. They want to trade. Trading is highly addicting. I mean, I love trading, but I've found a way to really step back. So I love putting on a trade when we do it because it's action and it gets the adrenaline pumping and it's all of that. But a lot of people I hear, they follow services and they're following these trades. They're buying leveraged ETFs. They're buying inverse ETFs. They're betting against the markets. Like the markets are all going up right now. I mean, we had a quick pullback in silver, but overall, a lot of people are buying inverse ETFs and betting on a falling market. And I don't believe in betting against the market. I think you should bet with the market because trends are more likely to continue than they are to reverse. So a lot of people will then take a loss when they bet against the market, following somebody, and they'll be like, I don't know why I even did that. Like they get so angry because it's so wrong. I'm like, I think a lot of people get led down the wrong path. Picking a top and bottom is not a very good play. And if you just look at a chart, like for example, I mean, you look at the chart of silver, the weekly chart that I have of silver here, or the daily chart. I'll just flip back to the daily, but it's all the same. Look at the moving averages. These green, blue, pink lines, they're all sloping up. They're all layered nicely. The trend is up. It's just having a big correction after a big, massive rally. I mean, it's up hundreds of percent. So it can have a sharp pullback. It's kind of the way it is. But overall, you've got to expect this trend to find some support and for it to have some type of bounce. And if you just follow the trend, you're going to be right more often than not.
And Chris, do you feel there's any other charts or any other maybe things that you're watching right now that you want more people to be aware about?
Well, I think the US dollar is going to have a move up. I think another one that I find interesting is the chart of Bitcoin. If we take a look at the Bitcoin chart here, I'll just zoom out. The chart of Bitcoin, it hasn't fully broken down yet, but this chart shows a very big sell-off. It has a kind of a bear flag formation. It is pointing to about $50,000 per Bitcoin. So there's a pretty big drop potential here. If the stock market rolls over, then I think we're going to see Bitcoin break down. And, somebody today was talking about how Bitcoin's making a double bottom. And you could argue it's definitely found some support. I mean, it's hard to see on these charts, but if I zoom in, we had this long lower wick, it bounced up. We had a long lower wick. As of today, we're speaking, it's bouncing up. Definitely short-term support. Do I think it's a double bottom? I'm not sure. The trend, when you look at the moving averages, I know this chart has got a lot of lines on it, but if you look at this chart, this green line right here, this is the 150-day moving average. When price is generally below it, especially the rest of the moving averages, and it's sloping down, you're generally in a stage 4 decline. And a good example of that is just take a look at this stage analysis chart. This dotted line is the 150-day moving average. And so if it is sloping down and price is below it, the odds are we're going to go into a much deeper correction. And so that is exactly what Bitcoin has done. This green line has been up for a long time. Price has naturally been above it, but now price is below it. It's sloping down. If we were to zoom back on this chart, we could very easily see this. We can do a Fibonacci extension here. We can get an idea of where that downside move is. And percentage wise, I mean, that's a pretty big haircut. Percentage wise, if we just measure that, we can see about a 30-40% move to the downside. And that will obviously be this big unwinding event. Bitcoin could go a whole lot lower. This is just the first leg. If we go into a bear market, Bitcoin is probably going to go back down into the 30s. But this is just what this one chart is pointing to is 50 is the next potential stop for it. So that's the one trade I like as an inverse trade. Like you'd play an inverse ETF to benefit from it. Not jumping into this trade yet. I'm keeping my eye on it. I'm not sure if I'm going to take it. It really depends on how the next few days and how the rest of the market moves. I generally won't buy an inverse ETF unless the stock market also has a sell signal. Because if the stock market is still going up, I really don't want to hold Bitcoin because it naturally kind of wants to move up with the stock market. So a lot of things have to align for this downward play. So I'm not sure if it'll be traded or not, but that is what the chart is pointing to at this point.
I really appreciate you sharing both those charts and just again, awareness, right? Awareness is crucial
Mhm.
if you
Yeah.
want to have any ability to take advantage or, move forward with that. Chris, one thing I want to move aside from, we've talked a lot about the financial markets today, and anytime I'm listening, trying to learn, I always like to get a better feel of the person who I'm speaking with. So, if we took all titles aside here, who is Chris Vermeulen as a person?
Yeah.
Yeah. Who are you?
Uh, Simple, laid back. I love the water, love fishing, surfing, kiteboarding, coffee on the dock, hiking, playing with my kids, watching TV with my kids, doing activities, hiking with my wife and the dogs, traveling. I love a good challenge. Throw me a challenge. Tell me I can't do it, more like, and I'll take it on. I love to invent stuff. I'm working on some amazing inventions. I've got a machine shop, so I build and make all my own parts and make prototypes. And uh, I have a lot of different businesses in real estate, self storage. I'm in the verge of actually selling a few businesses just to streamline, liquidate, get cash rich, get rid of some things that are a little bit more of a headache than they are. They're not really worth the headache. I'd rather streamline my life. So I'm just trying to I like to keep a very simple life as possible and just try and do stuff that I'm really passionate about. The markets I've been involved in since I was 16 in high school, and have lived and breathed them the entire time. It's kind of where I got today is because I understand cycles. I started a business when I was 23. I went to China, didn't know what to do, jumped on a plane, went to China to the Canton World Fair, where they sell like every product in the world. And you just walk around, and I found thousands of products. And then every night I would be sitting on the bed sorting through all the pamphlets because I had a wheelie suitcase, like 80 pounds by the end of every day, of all these products that I'd have a pile like yes, maybe, no pile. And then at the end, I ended up finding one product that I like. I ended up customizing it. I um, built a business in Canada and across the United States, a dealer network, got my product on as seen on TV, and I had a booming business in the healthcare space, and I was running my financial newsletter as well in the background. But eventually, I saw this economic cycle in 2007 coming to an end. I'm like, oh my gosh, this does not look good. And I kind of maxed out what I could do with the health business. My dealer network wasn't growing. I literally just peaked. I just couldn't get any more traction. And then I compared it to the stock market and the stages and the cycles, and I told my wife, I'm like, I'm done. I don't need to do this anymore. I'm not passionate about the health. I like to create things. So once it's created, I don't want to really run it. I like the creation, the creative side and the challenge. So I ended up throwing it up for sale. I didn't know much about business, a whole lot about individual business back then for selling. It was the first business I ever sold. I literally threw it online, and like I woke up in the morning and like 50 people wanted to buy it. So I stripped it off. I'm like, okay, something's out of whack. And then of course I jacked the price up about 300%, and I sold it just before the peak in the economic downturn. Knowing it was coming, I was just like, I have to get rid of it. I just don't want this business, and everything's going to dry up. And I did. And unfortunately, the poor person who bought it, I mean, they still run it. It's still alive, but they've never recovered. And this is why it's so important. Like what I share isn't just the stock market. These stages they're life defining, they're business defining, and it allows you to rotate around. Like right now, I'm just liquidating, streamlining things because I think things are about to hit the fan, and I want to have a bunch of cash, and I want to be ready. So when the next cycle comes, I can move into different real estate. I could buy businesses that are beat up, and you can turn them around or start a new business. I mean, everything you're going to get for pennies on the dollar. So you just have to have the money and not be like in a huge stress zone because you've lost money. You've got to have a clear mind and ready to go. So I love a good challenge. I love business. I like just creating stuff. I've helped my daughter start businesses that she's run online, and she loves the gem business. She used to do like online auctions almost every night selling gems. She would order in gems from China And I'd hear her in her room with the lights. I'd peek in and she's like, "Hey guys." Like, and she'd partner with other little kids doing with their gem channels and stuff. It was amazing. So I'm just a, simple dad, like to have fun. I'm the one who's always playing with the kids. I'm always taking kids out tubing and water skiing and sailing and all that stuff. I've got a good imagination. I can drop into kid zone, and I like to have fun versus sit around.
I love that. Beautiful. And it's something that honestly I wanted more people to hear because sometimes I read some of the comments on other channels and I'm just like, wow, you guys really don't know Chris, you know? Now,
I know.
I've had the pleasure to get to know you obviously over the last 5 years. You've also provided a lot of time not only to be on the show, but just tremendous mentorship, that entrepreneurship passion, that you just
Yeah,
shared,
yeah,
which is part of you, part of all the many things that makes Chris Chris. It's
yeah.
something that I've always really appreciated. And something that I kind of want to ask you from here is I always ask myself, I'm like, yeah, I know he's been in this space for years, but there must be a deeper reason of why you really want to help people financially. So I would love to hear your opinion on why are you doing what you are doing if you don't have to do it? Like you don't have to. Yeah,
Yeah, no, it's
sure.
a good question. I think there's a few reasons. I'm an entrepreneur at heart, so I definitely like money. There's big money where there's money. So I like the financial space from that, which sounds bad, but it's the truth. On top of it, I've been managing my own money since I was 27. And that was when I kind of semi-retired, built a dream home on the water and all of that stuff. And so now I just manage my money and I run it through my newsletter. So I still have to manage my money anyway. And it's fun to be with a group of investors and we go through this together. It doesn't feel like work to me. Everybody's like, you're always working. I'm like, it doesn't feel like work. Like I love this. I love communicating. I love sharing and helping people. But there's some much deeper layers in there. So for example, I grew up, we went through a bankruptcy when I was a teenager and my parents went through a bankruptcy and the I remember one day um I heard my mom and my sister screaming like bloody murder, right? And I ran over and I saw my dad shaking on the floor. Super emotional. Anyways, he was having a seizure. I remember we had no idea what was going on. He had lost a ton of money from an investment deal. And I remember my sister lipping the words to me saying like, "Dad's going to die." And like, that was the worst thing I wanted to hear, right? Ambulance hadn't got there yet. It was the scariest moment ever. That was when I realized financial loss is super dangerous. It kills people. It almost killed my dad, or so I thought anyway. And just from financial stress. And so that was like one of my biggest things is like, I am never going to put my life financials on the line. I will never go all in on something. I want to find a way that is super efficient that I never have to worry about losing my mind. So if something blows up, it is just going to take a little ding out of me. It's not going to like affect my family and all of that stuff or health, right? So that was like the biggest thing. And so that's where I'm at. Like in 2008, there was like 8,100 people that committed suicide from the financial crash, directly linked to falling stock prices. The government had done a study. So what we're coming into is very serious. It can ruin marriages, it can kill people, it destroys businesses, it does a lot of damage. And so I lived through that and it was such an emotional impact that's like one of the things I try and do is I'm always, how can I help retirees stay retired and stay healthy and just go and spend time with their grandkids or their own kids, right? So that's what I focus on. Like last night, my son and I watch a movie and we just cuddle up, it gets to a sad point, and he's like squeezing my hand, right? It's like precious. Like that's what I want. I don't want to be financially stressed because silver falls 30%. It hurts. It puts a ding in my account, but it is by far not a big chunk of my portfolio. Stock market is down like 1%. It's nothing today. I have things balanced. It's all about position and risk management. And that's what almost no one pays attention to. Even financial advisors, like they don't really have position and risk management. They say they're managing your money. Well, they are. They're putting it in, but go ask your advisor what happens if a 2008 happens again. They're not going to want to answer it. They're going to be like, well, you're probably going to lose 35 to 55% of your portfolio of your life savings in a very short window. And if everybody could know that that's how their money is being managed, it's not managed, it's just plopped there. And it's just the way the financial industry has been built. Unfortunately, if they all do the same thing and all their investors lose 50% at the same time, it's not them doing something wrong. It's just them doing what everybody else does. They can't get sued. So very rarely will you see an advisor want to swing for the fences and do something crazy, because as soon as they do something out of the norm, their client can sue them if it backfires. Advisors are stuck in a really, really shitty situation. And it's really not their fault. It's just the way things work, right? And I'm all about managing position and risk. That's what I share as my allocations, my whole portfolio. Everybody knows exactly what I do. I issue the trade to subscribers. We all take the same trade at the same time the next day at the open. Like, it's not like I front run. I don't buy and sell stuff before everybody else. Um, I literally just share my trades. They're based on end of day cycles, and we enter the next day or take targets and hit targets at the same time. So, um, yeah, that's just how I go about things.
I really appreciate you sharing that because it makes me think even I have a lot of friends right now. Some of them are in a really healthy relationship, but they're trying to make enough money just to survive, right? Have a home.
Yeah.
And with all the prices going up. And then I have other friends who are very financially literate and not working two jobs, but they have that education piece, and
Right.
so I really want to make sure that whatever background I see right now in a lot of my friends, that I'm able to bring on some of the smartest voices when it's a financial interview, and to
Yeah.
really provide both angles, so then they can really be financially educated. It's really, really important for me.
Mhm. Yeah, and it doesn't take a lot to properly manage and navigate. Like, the way that I trade, like, my whole goal has always been like, how can I have the most efficient way to trade the markets? So it's like, how can I get the least amount of trades? Because the more you trade, the more likely you are to lose money. There's all kinds of studies that prove it. So I'm like, how can I put on the fewest trades every year that catch the majority of the moves and has the lowest volatility? And so I've created this book called Asset Revesting, which explains how it works. There's an asset hierarchy. We always own equities when the markets are good, but as things get worse, we move to slower and slower moving the assets, which is the opposite of everyone else. Usually when things start moving faster, more people flock in to make more money, but it usually backfires. Um, I don't remember where I was going with that now, but yeah, I don't know.
No, I appreciate you bringing that up because actually for Christmas this past year, my old man Andre, who I know you met in Vancouver, I'm
Yeah.
so happy the two of you met. It was so nice to get a text update from him saying that he met you, but he had just bought your book. I know he's a loyal subscriber that follows all your work. So I really appreciate too your education to him, to me, to all of my community that's watching right now. And I want to take this last little bit of time, Chris. Thank you for being here. I've always enjoyed every conversation with you. I've always learned a lot, whether it's about charts or just your perspective of things that you're seeing. And more importantly, just more and more of who you are as a person. So really, really appreciate, again, your support and being here. And I also look forward to finally meeting you in person too. I know you're going
Yeah.
to be crossing through Montreal in a month's time. So
Yeah.
I look forward to shaking hands soon.
That'd be great. Yeah. Well, I appreciate you having me on the show. And I think it's nice to get into the personal side and ask the deeper questions, right? I'm just a normal person, and I work hard doing what I love. And I try to protect everybody from financial loss as much as I can. I'm not perfect, and I have my way of doing it, and it matches a lot of other people's way, but it obviously doesn't work for everybody. But I think it's important for people to see more than just somebody who's always, shouting out chart lines and stuff.
Totally, 100%. And I also look forward to down the road to thinking of other subjects that we could brainstorm together of financial education, because before even you invest or even speculate, you got to learn how to save, right? That's the
For
first.
sure. Yeah.
You don't want to be in negative credit debt, right? You really want to make
Yeah.
sure that you have actually cash to use, right?
For
So
sure. Yeah.
I just want to take this last with Tanya and thank you for being here. And I look forward to seeing you soon.
Sounds great. Well, pleasure.
Cheers.